Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. On Friday, the US dollar, which measures the greenback strength against a basket of 6 major currencies, managed to close the New York session above 92.85. As you can see here, in the last 2.5 days, the market has surged through 93 and now posts a fresh high around 93.30. What prompted this move was a slightly upbeat retail sales, which gained plus 0.7 in August after expecting a negative 0.7 month over month. That is a decline. Still, the market is very much on focus to the top side, which is seen around the recent highs of 93.60. That could extend on to 94.40. This would see the euro, which measures the against the US dollar index at 57.6. That is weighted. The market is now heading closer to its objective, which I've been calling now for a little while, at 116.75, where I've outlined here and reassess. We are oversold, but the trend is strengthening. So do continue to lower your stop losses according to your risk management. That is, in case we see a reversal unexpectedly. But at the moment, it looks like we're on set for this challenge down as all eyes turn this week to the US federal meeting, which starts for its 2-day on Tuesday with a conclusion on Wednesday, and then followed by Jerome Powell's post-meeting news conference. And the market will be especially looking concerned to the inflationary comments, and along with that, with the economic growth, interest rates. So let's see what Jerome Powell has in store for us. The Australian dollar has remained weak now for the third consecutive day and now sliding to its next objective, which was around 72.30, which was met today. In light of the ADX strengthening, and also there's still potential for a further slide, the market underneath 72.30 on a close in New York would see a view to 71.70. Any advances at this stage is to cap around 72.70. The dollar yen still maintains a slightly firm step since this last 2 days bullish candlesticks. Nevertheless, the market is a little bit apprehensive as it approaches this 110 handle due to the fact that we've seen much supply from that level, and no doubt we'll see it again. And if so, we could see another rejection from that 110 25 45 area and look back towards the bottom side of the range around 109. Sterling was also weaker on Friday and now into its 2.5 decline since the rejection of that 138.80. Has now posted a weaker close under one since the break of 137.80 and now looks towards potentially to 136.35. All eyes look to the Bank of England this week, and it's unlikely to see any change in policy at their meeting, but may indicate whether inflation is still transitory. Let's see how that all plays, but still the bears are still holding for the sterling, which means in terms that we're seeing a weaker play in sterling yen, as it now heads lower since the rejection of that 152 area and looks down towards the region of 150.40 with 149.70 underneath. Looking at the gold aspect, well, the target was reached only a couple of days ago at 1,748, and not much is seen since that doji. Nevertheless, the market may, due to the ADX trending and the two technicals, the RSI and MACD negative, that we could see a close under 48. That gives me my next target of 1,726 to 28. And wrapping up with oil, the market is somewhat weaker since its retreat from that 72 resistance area. With a bearish dragonfly doji, the market is reversed and therefore looks towards this support level, which comes in around 70.45. Now a close under there would reinstate the downside to around that 67.40.80. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the new week.